Hi, I'm Stephen Wener with Whissel Realty, and today my guest is Martin Lopez from iServe Mortgage. How are you today?
I'm doing good, Steve. Thanks for having me over.
My pleasure. Today we have Martin in because we were going to discuss what's going on in the mortgage market and some of the things that Martin is running into when he's working with new clients.
So one of the things, Stephen, that I run into is people having to make the decision whether they're going to go FHA or whether they're going to go conventional. That's a big thing. A lot of people don't have big down payments, so they're looking at, am I going to put 3.5% down for an FHA loan, or am I going to put 5% down for a conventional?
Okay, so people can do 5%?
Absolutely, yeah,
okay.
Absolutely. Even 3% on a conventional loan as well.
Do many people know that?
Not a lot of people. It's a new product that's out, and a lot of banks are just testing the waters on that 3% loan.
Okay, so why would somebody go conventional versus FHA? What are the hot buttons or the topics that you can actually touch on?
You know, for me, what I look at when I'm consulting somebody is we'll talk about the area, we'll talk to the agents such as yourself.
Sure.
Well, I'll call you and say, Stephen, is this a house that you think is going to have a lot of appreciation, or what do you see this house being in 4 or 5 years?
Okay.
And then we're looking at that mortgage insurance payment and looking and seeing, is that mortgage insurance payment going to leave the loan? If we don't see that happening, maybe the FHA is a better product. And then there's a whole thing you want to look at with regard to credit on an FHA versus a conventional loan.
Okay, well, before we talk about credit, what I want to know about is a couple of years back when FHA made mortgage insurance permanent. Is that still the case?
That's still the case right now.
Okay, so how would that translate into somebody wanting to hold their property long-term versus short-term?
People are looking at the interest rates and saying, you know, I'm going to get an interest rate at XYZ. This is going to be my interest rate.
Sure.
The mortgage insurance has dropped on the FHA, so that brings the payment down. And they're looking at that long-term payment. Am I going to refinance in 3 or 4 years? Who knows where the interest rate's going to be? I will take my chances with an FHA low down payment. I'm going to get in. I know where I'm going to be. Versus conventional, I like this interest rate. I think the house is going to go up, and that mortgage insurance payment's going to go away, and then my payment's going to be lower than the FHA.
Okay, perfect. And so one of the things that's critical based on my business is making sure that somebody is completely qualified when they're going to go buy a home. So can you give us the critical parts of when somebody is seeing you before they find a home versus they've made an offer and now they're looking at you?
Oh, absolutely, absolutely. When you make an offer and then you go and see your lender, we're working backwards. Now we've got to look at your credit. We've got to deal with any kind of credit issues. We're looking at your assets, and if there's any question with regard to your assets or your income, your job and all that, you're really working backwards. Versus at the beginning, if we're looking at, I say CCIP, cash, credit, income, and price. So if you deal with your cash, which is your assets, you know how much money you're putting down. Your credit, you know where your credit stands. Your income, you know where that stands. That gives you a price range. Then I believe you're a stronger borrower going into negotiating.
Okay. Well, in order to find out these things before you make an offer on a home, to me are critical, and it's a big first step for me. I'm step 2 in this process. The lender is step 1. Please contact Martin Lopez at iServe Mortgage. I'm Stephen Wener, Whissel Realty. Thank you.